Okay, we're looking at order blocks and what is order block. Okay, order block is the last candle of a particular trend. So that's in the simple way of explaining what order block are. They are, or are not are rather, order block is the last closed candle of a particular trend. So it could be a bullish trend like this. You can see this one is a bullish trend, or a bearish trend, something like this. Okay, so I'm going to explain each of them one after the other. I'm going to explain starting from this bullish order block. So now if I draw this, you can see that we are on an uptrend. We are bullish in this market. This is gold, and let me zoom in so that you can actually see what I'm talking about. See what I'm talking about. Okay, so you see that we are bullish in this market, and the last candle, the last bullish candle, which is this very one here, is the order block. So like I said earlier, it is the last candle of a particular trend. And how do we measure order block? This is very simple. First of all, for us to measure, first of all, how do we measure it? Let me delete this first. Okay, to measure order block, another block, you take the swing high of it, the very tip of it, which is the top of it, and you mark it, and you also go to the bottom of it, and you also mark the bottom of it, and boom, you have all this area is considered as the order block area. So this is your order block, and I hope I'm clear. Like I said, it is the last candle. If you can look at this chart, this is the last candle of this particular trend. So another thing is, how do we validate an order block? How do we know that this is actually an order block? For the fact that it is the last candle of a trend, that does not really give it a good that does not mean that it is validated as an order block. How do we validate an order block? Okay, it's very simple. It must have a swing high like this. You can see this wick, this wick. You can see that this is the swing high of this very candle, and it must also have what we call a fair value gap. You understand what I mean? It must have a fair value gap. So what is a fair value gap? A fair value gap is the space between the order block and the third candle after the second candle after the order block. So this is the second candle after this order block, and the space, if you are to count the space, is this place. Let me move this now so you understand. Sorry, let me move this. So if I carry this to this point, to the tip of this one, so this whole space here is what we are calling as fair value gap. But I'm going to explain more further so that you can understand what I mean. So for me to, like I said, for me to measure the fair value gap of this very order block, to validate it, let me draw something. I need something to draw. For me to validate it, I'll need to draw something. Now I'll take the bottom of the order block itself. I'll pick the bottom of this order block, and the tip wick, the tip of this other candle, this second candle, this second bearish candle, the tip of it, the tip of the wick, I'll pick it. Then I'll pick the bottom of this one and take it at the tip of this one, and boom, you have your fair value gap. So this tip, the bottom of this order block to the tip of this second candle, is what we call a fair value gap. So we've seen two criteria that validates an order block. We've seen two things that validate an order block. First of all, I say it must have a swing high, and second, it must have a fair value gap. Now this is the fair value gap. Now another thing you should know is that we have a fair value gap. Let me write FVG, which is your fair value gap. I'm gonna take this in here so you know that this whole point is your fair value gap. So because this order block has a fair value gap, it has a wick and it also have a fair value gap. So I'm going to say number one to validate it first. Number one, it should have a wick, though it's not always necessary, but for this scenario, for most times it should have a wick. Sorry, I'm going to go and write two. Number one, it should have a wick. It's not necessary, but it should have a wick. So number one, it should have a wick. That's one. It should have a wick. Okay. And number two, it should have a fair value gap. I'm talking about order block now. It should have a fair value gap. So like we see here now, this is number two. It has fair value gap inside. You understand? It has a fair value gap. So this is two. It has fair value gap. So now with this, we have validated this order block. This is a valid order block. So what happened when we see order block? Now, if you clearly look at this trend, clearly look at these charts, you will see that we are all bullish. Like we are going up, we are bullish upward until price started to change direction. And what makes price to change direction? It was this order block. This order block made price to change direction. So one of the things you should look out for is that whenever there is an order block, price will like to change direction. So another thing is, how do I measure this order block? I've measured the fair value gap. How do I measure the order block? So I think I did it earlier. I'll go to the top of it, the very tip of it, and take it and go to the bottom of it. This is the bottom, and also take it. So all these points here, all this space you're seeing here, all this space is what your order block is occupying. So what happens when an order block is formed in the market? IPTA, which stands for IPTA, we always IPTA stands for Interbank Price Delivery Algorithm. Interbank Price Delivery Algorithm. They always push price inside the fair value gap and then mitigate price downward. Meaning, if there's not fair value gap, rather, they always push price inside the order block, and before you know it, they push price downward. I think I should take this upward. I should take this to this place. This whole place is the order block. So now I think another thing I should do, I think I can do this. Pardon me, I'm coming. That's right. Some people will understand what I'm talking about. So let me change the color of this. Okay, let me change it to this. So price will always go inside the order block. You can see that the whole candle is what we are looking at. Price will always go inside, and what happens when price goes inside the order block? It will then go back. It will go back. Now, this order block was the main reason why there was a change in the market. A change of character started happening in the market. Sorry, not change of character. A change happened. Sometimes it might be change of character, yes, but in this scenario, what actually stopped this market from going higher was because of this order block, and it was valid. It has fair value gap, and you saw that even when price tries to push upward, it came inside the fair value gap, and it came inside the order block and pushed downward. And if you look at it, it started moving all the way downward. Because of what? This is a valid order block. And one of the things I also look out for when I was trading, because I do trade gold, that's what I focus on. One of the things I was looking at while I was trading, I saw that the previous day high, that is let me change my time frame. That's the previous day. Now you can see this is the previous day high. This is the previous, this today. Yes, this is today. This is yesterday. So the previous day high was somewhere here, and I saw that if that's the highest point that market went yesterday, there's a higher probability that today the market will not break over that point. So that is why when that order block was formed, I quickly made use of it. I don't know where I am now again. I don't know where I am. I just pray God help me. Let me just shrink this. Let me shrink. Oh, sorry. Let me shrink it. I think it will help me to know where I am. Okay, I think I'm this way. Okay, so now you see that from the previous day high, that's yesterday highest point, that price was trying to beat it, but because another block was formed, another block that has that is validated was formed, price started coming downward. So another thing I want you to look out for is, how do I measure half of this candle, half of this order block? How do I measure it? It's very simple. Remember, the key things you have to take out from this case is let me delete all this. The key things you have to look out for is your swing high, which is this. If it's a bearish movement, you will look for your swing low. So this is your swing high and a fair value gap. Boom, you have your validated order block. And what will then happen? Let me measure the fair value, the order block. Let me measure it. So if I'm going to measure this order block, pardon me, if I'm going to measure it, I'm going to measure this order block. I want to take the 50 now let me bring this to, now if I measure 50% of it, okay, let me then delete this. Let me delete this. Okay, now you can see that I have measured the 50% of this order block. And what happened? Price will always try to come inside and take at least above 50%. But in this case, when the order block was formed and was validated, price came in, and though it was not able to take up to 50%, it went downward. This is a bullish scenario. Now you should always know that even if you have a trend that you're having red, green, as long as it is going up, the trend should be considered a bullish trend, and you look out for a bullish last candle to form that order block. Let's look at a bearish scenario.